ahead of next week's Jobs Summit, the Treasurer Jim Chalmers has also set his sights on reforming superannuation. In particular, he wants super investment to target more nation-building projects like new housing and renewable energy. For more on this, let's bring in Matt Linden. He's the Deputy Chief Executive of Industry Super. Matt, thanks so much for your time. Jim Chalmers wants the Jobs Summit to look at how super, in part, can respond to what he calls the dire shortage of housing. What more can be done there?
Well, look, we know this is an enormous challenge. Housing is out of reach for so many Australians. And from a retirement perspective, it's really important that to have a secure, dignified retirement, that you've got access to affordable housing. So this is important in terms of retirement, but it could potentially present significant new investment opportunity for the funds.
So when you look at investment in infrastructure, as Mr Chalmers pointed out yesterday, it's gone from 3.7% to 6.6% since 2014. At the same time, residential housing has only increased by 1.1%, from 7.4 to 8.5. Why has there not been as faster growth in housing investment by the funds?
Well, look, from the funds perspective, they've had greater exposure to commercial property. So when we look at that as an asset class, that's been more attractive for the funds. Typically that's been through investing in office buildings, logistics hubs and that type of thing. However, there is an opportunity in affordable housing. Some of the funds already have got exposure in that area, and we think that there's an opportunity potentially in the future for greater investment.
Well, one of the things that the Treasurer is arguing for is that this housing supply, the reason why it's relevant to the Jobs Summit is because it's crucial for labour mobility, to be able to have workers move from city to city without prohibitive costs over their head.
Absolutely. Having access to secure, affordable housing is a prerequisite for having a job, participating in society, creating the right sorts of circumstances for your family to succeed. So it's important. It's an important social good, but there are opportunities there for funds in terms of investment. And
are there substantial opportunities that would, say, equate to the level of return you might get from infrastructure?
Yeah, so this has been one of the challenging things, particularly when you're looking in the social or affordable housing space. By definition, those tenants are not necessarily paying market rents. They're paying less than market rents to assist in affordability. So from the perspective of investors and super funds who have the financial interests of members foremost, they need a way to try and adjust the risk-return profile of those investments to make them stack up.
So at the heart of that goes to a question I guess that your industry and your organisation deals with on an ongoing basis, is weighing up the returns to members versus the social licence which superannuation funds have to operate. How do you do that?
Well, the most important thing for fund members is returns. The second most important thing is returns. And the third most important thing is returns. We know from the investments that the funds have in the domestic economy, there are, of course, going to be economic and social spillover effects. And they're certainly important, but the main focus for the funds is getting the best returns for members. But I think most members would be happy to see that their funds, if they're able to generate a good return in a particular investment or asset class, that if there are these positive effects which spill over from them, I think they'd be very happy to see that and see their superannuation contributions invested here in Australia.
So if you have, say, an opportunity to invest in infrastructure overseas, be it Europe or North America, and it's a similar return here, do you make the case to make that investment here for our own public good?
I'm not sure necessarily there's a need to have one or the other. Investments of this type are very, very attractive for funds. They potentially provide a very predictable long-term income streams, which are really important for generating those solid long-term returns. If anything, there should be more opportunities in terms of the overall investment portfolios for these types of investments. So, we'd like a situation where it's possible to do both, and we think that there's an opportunity to do that. the system, the size of the system now is immense. Industry funds now manage over $1 trillion on behalf of almost half of Australians who have a superannuation account. There's cash flows which need to be invested of around $200 billion a year between contributions and those investment returns that continue to come in.
Yeah, it's a huge amount. And in industry funds alone, $1 trillion, the whole industry upwards of $3 trillion in this country. Jim Chalmers spoke about a lack of investment in aged care out of super. Is that something as well where you think there is a potential upside that has a very clear public good?
Well, again, the important thing is there an acceptable return for members? Now, a number of funds have already got exposure in aged care, and it's more around providing capital for the facilities to ensure that there's quality aged care homes with the right sorts of facilities. One of our funds, Hester, has invested in a groundbreaking aged care facility, a dementia village in Tasmania called Karongi, which will, maybe be the blueprint of what residential aged care looks like in the future. So that is certainly an area where there's likely to be needs and potential investment opportunities. We know. Well,
it's a growth sector with an ageing population, isn't it?
It is. There is an ageing population, and there's a greater need around investment in health and aged care. And I think most people understand that although there's a core responsibility for government in these areas, with their balance sheets and the government's balance sheet through the budget really stretched now as a result of COVID and the GFC and the cumulative effect of that, attracting some private sector investment is potentially an important part of the solution.
And it could provide that answer to predictable and long-term returns on investment as well, if the structure in funding and the whole setup is put on a more sustainable footing.
Yeah, that's correct. And there's a precedent for this. There have been funds which have invested alongside. There's been a lot of work done with the New South Wales government in terms of investment in infrastructure. The funds have provided capital before for law courts, for schools, for hospitals. But there is certainly the opportunity, if there's a need for capital investment, subject to the right sort of incentives in terms of how government can play its role. These are certainly investments which can stack up.
Now, Industry Super, I know a recent report you did looked at renewable energy projects that super funds hold stakes in, can power almost 800,000 homes. So it's quite a substantial investment in renewables and clean energy. Is there room to upgrade that spend with obviously a big focus on transmission capacity by this government? Is there more scope for investment?
Yeah, so those numbers you referred to relate to investments committed to date. As I mentioned, the funds have got enormous cash flows year on year. There's around $200 billion a year where they've got to invest that money on behalf of members. And clearly, renewable energy is a growth sector, and there are significant investments which are needed in the network in order to ensure that renewable energy can make its way into the system and we can have a reliable energy supply.
Do you see it as a potential for some good returns there, that industry, given you've already got your toe in the water?
Look, there certainly is. The funds have already got significant exposure to renewable energy investments and also network infrastructure. Australian Super, along with IFM Investors, has got a significant ownership stake in Ausgrid in New South Wales. So there's a lot of thought going into how those networks will need to change and the additional investment that's needed in order to facilitate the transition in energy supply, which will be needed for the economy.
And just finally, before you go, there's also a fair bit of controversy around recently on Stephen Jones' move to change the disclosure requirements for super funds. But why is the current setup not working with the itemised disclosure of things like political donations?
Look, I think it's important that there's a high level of transparency when it comes to superannuation funds and their expenditures. There is already significant disclosure in annual reports and in financial statements, probably to a higher degree around remuneration as well, at least on a par with corporate Australia.
Is it itemised though, so that members can go in and say, okay, this union donated to this fund and so on? or money went the other way, more importantly?
Okay, so it will differ. So in terms of remuneration, there will be itemised disclosure. And that includes some of the things. Some of the issues here is that there will be duplication in terms of where things are being reported. Transparency is very important, and it should occur in a way that's meaningful and helpful for members in terms of them understanding how their fund is working and to ask appropriate questions if they want to. I'm not sure that itemised lists, 30 or 40 pages long, which is what would occur under the regulations which the former government made, would necessarily be that helpful for members. But the government, we understand, is looking at those draft regulations and is likely to finalise them soon. There may well be some changes which I think address some of the concerns which have been raised. On the issue of political donations, for instance, our view is there is no problem whatsoever with itemised disclosure, simply because funds do not make political donations.
Does money go back from industry funds into unions via salaries?
Well, there are arrangements at the moment with the funds and both employer bodies and unions who will have trustee directors on the board. And there are directors' fees which will be payable to both those employer bodies, as well as potentially union directors on the board, as well as independent directors. They're remunerated for the work which they do in fulfilling their duties and obligations. So
that's disclosed?
They're currently disclosed very clearly.
That will remain?
That will remain the case. You go to an annual report and it will show you those directors' fees individual by individual, and in instances where it may be paid to a relevant union, if they're an official on that union, that'll be clearly disclosed already.
Matt Linden, Deputy Chief Executive at Industry Super. Appreciate your time. Thanks so much.
No problems. Cheers.
Talk to you soon.